What's going on, guys? We're going to look at the Nasdaq 100. We're going to look at the futures. So today, I didn't really find too many opportunities based on what I was looking for with the amount of risk that I wanted to put up. So I really didn't make any money on the future side of things. So what I'm going to do is I'm going to kind of back test this price action. I want to kind of create this video as like an open journal so I can kind of reflect back on it. So when I do get another day that's like today, I can definitely have something to reference off of. So let's look at the overall picture. The overall picture is we have been making a nice bounce off of the bottom, right? We've been bouncing 6-7 consecutive days in a row. We can almost assume that we're looking and due for a little bit of a pullback. So with that kind of being said, maybe there was an opportunity to take a short position off the high of day. Now, it's easier said than done when you look back at it, right? It's easy to say in hindsight now that we should have shorted off the high of day, but let's kind of reflect. Let's kind of look at things and see how we could have kind of played this. If we would have analyzed the price action off the bell, right? Understanding that any kind of push higher when we have on our 7th day in a row moving up, if we push off the bell, meaning we spike, and then we start to give it back, that might be an opportunity to go short and use the high of day as a stop. Now, typically what you want to see is when you're making these highs, you either want to see a gap down, trap shorts, and then go long, or when the bell rings, if we're opening up pretty flat, which we were this morning, we want to see a nice washout off the bell and then look for that first hour candle to trap shorts and then go through that whatever high point it was. Now, being that right off the bell, you can notice this candle here right off the open. The first thing that we do is we spike. Okay, so automatically once we start to spike and we put in these highs over the overnight session price action, what we then have to do is wait for the first hour candle to close, which is 30 minutes off the bell. And then we would need to see, right? We would need to see price action take out 15,417. Now, that was the area that I was looking to go long this morning. I was talking to some of the guys in Evolution Traders. I was sitting on that area, 417.5, 417.5. If we would have got over that area, I wanted to be long. Now, once we started to pull back, I want to really start to analyze something here. Once we started to pull back and we lost the 20 SMA, we should have gone short through the loss of this structure, okay? So if we look at this kind of structure here that was being put in, look at this structure. Off the bell, we put in a spike, we put in a new high, we pull back, we close at the top of the range, we come back down to the 20 SMA, we hold the 20 SMA, we try to put in a new high here, that's that high of 417.50 on that first hour candle, and then we start to break structure. So once we break this structure, what I need to do myself is understand and identify if I use the high of day as a stop and I get in on this short position through the 20 SMA, that could potentially be the start of a change in trend, right? So instead of kind of waiting in this particular situation to kind of confirm it, even if we would have waited for it to confirm it, we would have had to sit through an hour worth of, sideways action. But I would like to catch a little bit more meat on that bone, right? So as soon as we started to break through this 20 SMA, maybe we can jump short on this type of play setup and then use the high of day as a stop. Now, if we would have done that, it was a 40-point risk. So you definitely have to manage your position accordingly, manage your risk accordingly, because if you put up a 40-point risk and you're trading 10 mini contracts, you're going to be down very, very significantly, $4,000 right around that area, right? So again, kind of look at this price action, and tell yourself, what can I afford to lose if we do take out the high of day? Now, for me, because I'm not really looking to hit home runs on the futures, I'm just looking for supplemental income on top of my options trading that I do. I wouldn't mind putting up 1 or 2 micro contracts. One contract would have put me down around 80 and 2 contracts would have put me down around $160. I think that risk level is tolerable for almost anyone out there. So when you start to get this price action and it starts to break down, quickly draw yourself a little red box like this so it's clear, right? Because we're very visual creatures, us as human beings. So when we see this red box here, and even if we were to start to bounce up into this red box, as soon as we break out of it and we're breaking this high of day, that's our indicator to get out of this trade, right? So we could have essentially got short once we started to break through this 20 SMA, and the price would have been around 383. Now it does put in a low all the way down here at 335, which is 50 points. And then we go backwards. We stay under our resistance level, under our box. And then we get the flush, which actually goes all the way down to 286. So it was essentially a 100-point drop that was very, very hard to identify in real time if you were looking at price action here, price action here, price action here. When we broke this low, then it bounces, then you're looking to go long here, then it stops you out. You kind of have to look back on the chart and kind of see, well, what exactly is going on? What type of picture is being painted? The picture that was painted was we shot up off the bell. We put in this high for the first hour. We kind of trickled around here holding this 20 SMA. Now the 15,417 was our high. That would be our absolute max pain, because if we do break that, now it's open skies and this thing can absolutely run. So once we start to break this structure and we start to flush, that's your indicator to kind of get short now instead of waiting for the confirmation on the 20 play. Because you're going to have less risk on this trade and it's not going to frustrate you as much when it starts to barcode and go sideways. Because I could see how a lot of people would take this short and then it comes back and maybe you stop yourself out and then it puts in a new low and then you go short again and then it stops you out again. And then we finally break this level of 335 and we think that it's going to go all the way down, and then it comes all the way back, closes over the 20 and probably stops you out. And then you maybe go long and then get stopped out. So do you notice how this action here from around 7 a.m. all the way until around 8:55, which is almost 2 hours, could definitely chop someone around and can definitely frustrate you into a point where not only are you not making any money, but now you're just forcing trades. And I personally had to walk away from the charts today because every time we were down in this range, I was wanting to short it. And I was feeling every time we were bouncing, I was thinking maybe I should just get long for an anticipation break all the way back up to the high side. So when I left this morning to go get coffee, I really thought to myself, if I go back to the charts, and even though I missed this trade here and I missed this trade here, I'm okay with that, because I knew that myself, if I was to stay in this action here and we did not break down, I was going to start to give away the money that I've made this week. And that's never something that you want to see. So again, how could we have played the Nasdaq a little bit better? Understand where we're at on the daily chart. Understand what was going on. We're on our 7th consecutive day moving up off the floor. And instead of the market washing out to kind of trap shorts and then go through the highs, or gapping down to trap shorts and then go through the highs, we actually did the opposite. We shot up off the bell. And what this did was trap everyone who wanted to get long for that 8th day kind of continuation higher again. So we actually trapped bulls and buyers in this area, and then we washed them out. This made people, get chopped up, and then it absolutely washed them out. And when it did finally do that, now everyone who was on the late train trying to catch the short position down here and down here got trapped going into and coming out of the New York lunch hour. Algos basically got turned back on, and it basically trapped all shorts that got in late. So you see how that kind of works? So that's the way I think I could have played it better today. Just passing that information along to you guys. By the way, guys, if you guys are looking to join Evolution Traders and kind of get this access to this intraday technicals in real time where I'm live trading, you want access to the community, access to my courses, access to my calendar where you can schedule one-on-one coaching, I have one space available at this current price point. Once I fill that space, I'm going to double the price, and it's going to increase going into 2024. So if you do want to get access and you've been thinking about it and you're on the fence, right now is the perfect opportunity because it's a first come, first serve basis. The next person who joins gets access to that lifetime pricing. It's only a one-time payment. It's not like you're going to be charged each and every single month. And from there, everyone else after who comes in will pay double. I'll see all of you guys on the next video. Hope this kind of analysis in this journal, this online video journal kind of helps you guys. I'm putting my thoughts out there for you guys to kind of go back and look at your charts and see if you analyze it and see it the way that I do. Again, as traders, we're always striving to get better. There's always something that we can do better. There's always something that we can fix. Today, I felt like I did a pretty good job at just walking away from the charts, resulting in allowing me not to just take a bunch of little scalps, because I know what was going to happen. I was going to try to oversize myself and catch a little scalp here, and then I was going to be, probably wrong on one of these ideas, and then it's going to trap me. I give it all back and I try to scalp long, and it was going to trap me. So I did a good job myself walking away from the charts, even though I didn't make any money on the future side. Options paid today for me, Amazon, Tesla. So you kind of have to, there's a little bit of a give and take, right? Like, we take a little bit from the options. We didn't really get anything on the futures today. So that's why I'm really going back and dissecting the price action from today to see what can I do wrong, or what can I do better, and what can I avoid doing wrong for next time. So I can know how to play these days a little bit better instead of just walking away from the charts. Kind of how could I have played this day better to result in profits? So again, hope this video helps you guys. And if you guys do want to join, I got one space left. I'll see you on the inside.